Deal structures for data centers are evolving and getting more complex as demand continues to be sky high. So what does that mean for valuations in this market as some investors begin to question whether AI is in a bubble? Joining me now is Alex Ramirez. He's Guggenheim Securities Senior Managing Director for TMT, that's Technology, Media, and Telecom, the firm's lead data center banker. Alex, I've got questions about this because I don't understand this end of things at all. I'm trying to work with an apartment building metaphor because data centers have tenants. Is it like luxury in New York City is like AI, in a data center with the hyperscalers as tenants? How do you judge what a great investment really is?
Yeah, well, why don't we just start with the fundamentals of the sector, right? I think that's a good place to be and kind of what's happening right now. And to your point on other real estate asset classes, vacancy rates, right? And so right now across North America, vacancy rates are sub 3%, okay? But in tier one markets, and some of these tier one markets, it's sub 1%.
So when you say tier one markets, what makes a market tier one in data centers?
Yeah, so just think about some of the top markets where there's been tons of demand. So it's kind of where cloud centers were initially built. So, Dallas is one great example, and there's a few others like that. So, but what you've seen is the demand has expanded to newer markets. Look, and so thinking about on that point around the fundamentals and the strength of the sector, what we're seeing too is supply right now is constrained, and I'm sure you've heard a bit of this. And what's happening, and it's going to get exacerbated over time. So by 2030, our estimation is that imbalance of supply-demand could be up to 10 gigawatts.
Now, is supply for everything constrained or just for the AI? Because it's, in office right now, you've got Class A that's still doing really well, but you've got some office that's not doing as well, depending on the market. Is something similar happening in data center?
Well, it all kind of goes to power, right? And that's the source, and honestly, that's the gatekeeper of everything, right? And so when you think about the grid and what's happening there, in certain places, the grid lead times are 5 to 7 years away from now. That's been changing. It's been a tectonic shift. And what really that boils down to is if you think about total data center consumption as a percent of total power, historically it's been 2 to 3%. We believe it's going to quadruple over the next 5+ years to 10 to 12%. And so that's a lot of what's driving. And what you're seeing is actually the utilities themselves are getting pretty smart about it. So now they're starting to charge for deposits, requirements for turbines and other infrastructure. And what we've been helping and seeing a lot of too, and it's one of the reasons I spend so much time with my colleagues that run our power and utilities teams, is collaboration amongst the tech companies, the utilities, the data center developers. And developers are now starting to think outside the box. How else do we get more power? Whether it's behind the meter solutions or different forms of power. Nuclear, renewables, this is all going to become part of the solution.
So I'm going to stick with the apartment building metaphor. Yeah. If you were looking at building luxury apartments, I imagine you look at, okay, what are the employers in the area? How well are they doing? How likely is this building to have a strong supply of tenants able to pay over time? Is energy like that for data centers right now?
Yeah, look, historically, you would think of like strong GDP centers where a lot of these big data centers were built. But what we are seeing is it's expanding to new geographies where there's so much need for this infrastructure that, I'm sure you've seen this recent announcement where, Meta is building a, $29 billion project in Louisiana.
Yeah.
Like historically, you wouldn't have thought of that as a tier one market. But what's happening now is there's so much need for power across the board that it's going into newer markets.